Welcome to the club. You're officially part of live streaming and YouTube world, and congratulations.
Thank you. This is my first time ever doing anything like this, so I'm gonna
Yeah,
make mistake.
you're a YouTube version.
Yeah, and I'm gonna make mistakes and I'm gonna say stupid things. So apologies in advance.
Yes, both of us. And that applies to I think everybody trying to do a live stream when they're 30-year-old. This is not a technology that I'm very good at. Um, so I think I wanted to start. I was just thinking like like how we met, and I think one of the main things that when we met back in Europe, when we moved to Europe, um, to me was like, very honestly, when you told me you bought a house, I didn't understand. I was like, how? I think my first question was like, what do you mean you bought a home? Like, how can you do that? Like, you're just here for less than a year when you moved to Amsterdam. And I genuinely used to struggle. Like I used to count my money when I was doing grocery shopping. And I used to think कि the people who buy homes, they're like, you know, leagues ahead of you. They have, either parents' money or, they've just hit a jackpot. I think that was my first understanding of finance. Like, oh, it is possible. So talk to me, like, what was that process? Like, Tune, when you bought the house, was it a balls move for you back then? I mean, how old were you? 23?
I started the process when I was 22 and I
Yeah.
uh, finished it just after turning 23.
That's insane. So, what was the process like? Talk to me about like when you moved there. You're not like earning a lot, right? You're earning decent. You're starting as a junior engineer in the team, and talk to me like what was the equation looking like? Why did it seem so obvious to you to buy a house?
Yeah, so there are many things that contributed to this decision which may not apply today or may not apply everywhere. So we'll go through those things one by one. I can give you a quick insight about my journey as to how it all unfolded and how I discovered those things. I joined Booking.com as a graduate developer. It was not a full-time developer. It was something like an intern, but also not like a junior, even something in between. And the program was 1 year program, 1 year fixed contract, and after that, you may or may not get a full-time job at the company, depending on how that 1 year went for you.
Yeah.
So that's how it started. And when I got there, I was fresh out of
And they got you in from Bangalore, right? Or Delhi.
from directly from Delhi. So I applied on their website immediately after I graduated in
Yeah.
of 2016, and they got back to me in a couple of months, and the interview process began. And that time there were not many things being done remotely. So
Yeah.
when I cleared the first telephone interview, which was literally on a phone, not on a Zoom call, they invited me to Amsterdam. They paid for my visa, a tourist visa, a four-star hotel in Rembrandtplein, and a 4 day stay. And this was standard procedure for all of their hires. But I was fresh out of college and I had zero work experience. And I was used to training and placements from DTU, that old government building where 100 kids are just fighting to get a little ounce of attention. And over here, they're giving me a four-star ticket in the city center and asking questions like, if you wanna explore the city, you can also, take 4 or even 5 days on us, just so you can visualize being in Amsterdam, seeing if you can live in this city.
Oh my God.
And I was like, I don't need to do any of that. If you give me a job, I'm going there. But I was like, okay,
Yeah.
if you're offering it, of course I'm gonna take it. Maybe I don't get the interview, at least I get a trip out of it. So this was in November, and I go there, and I love the city. I fell in love. It's beautiful.
Yeah.
I was alone, and I was just touring the city. But despite that, people seemed very friendly. I even met some people while I was hanging out in the city, and I did what the company expected me to do: just go around and see what it is. And even though I was already sold, I got even more sold, if that's even possible. I was. confirmed my decision. And luckily, the interview went very well, and it went so well that they told me immediately. As soon as the interview got over, the recruiter came back to me, and he said, "We're offering you a job." And
Uh-huh.
he started explaining the conditions. I remember this quite vividly. He was explaining that you get this benefit, you get that benefit, and he's like, you can take all of this home and you can take your time and think about it, reflect on your trip in Amsterdam, get back to us whenever you're ready with a decision. I was like, I am ready now. Where do I sign? Like no negotiation, nothing. Like I was used to campus placements where there is
Yeah.
negotiation. It's like, okay, you this is the offer, do you want it or not? So it's something I realized later when I met some of the other
And
graduates.
how much did they offer you as your first role back in Amsterdam?
It was 3,600 euros per month,
Wow.
and with in the Netherlands there is this thing called 13th month. So with one
Yeah.
extra month of salary and a 3,000 euro relocation bonus plus 1 month of accommodation paid by the company when I come in, and
Yeah.
also a full container of uh,
Of luggage, like
yeah,
relocation stuff, right?
yeah, I
But is this that's average, right? Is that average tech salary or is that average salary in Netherlands?
it is way above average salary in the Netherlands in 2016,
Hmm.
and it
Hmm.
was for an internship.
What is an average salary? Like back then, what was the average salary?
One of my friends joined as an operations manager, like not as a manager, but just operations executive, whatever, like in a team of operations as a team member.
Operations people are not paid, bro. I was an operations manager at Amazon, and my roommate was a SD like you, and night and day difference.
Yeah, but I mean, it's any other job, marketing, sales,
Hmm.
logistics, and I learned so many new job titles after I moved there. When I stopped talking to only tech people, there are also like buyers and sellers and merchandisers and whatnot. So
Yeah.
all these guys were around the 2.5 to 3,000 range, and,
Uh-huh.
like entry level,
Yeah.
or junior, and I started with 3,600, so it was already quite a big boost. And on top of that, when you are not from the Netherlands and you get hired directly from outside the country,
Yeah.
there is a tax benefit that the country offers.
Hmm.
In 30% of your salary becomes tax free.
Yeah.
It's
So,
yeah,
but your case is very similar to like people who move to America. Like, if you take away the education loan and stuff, like people who move to America, their starting salary in tech, even if you're not in SD, is like around 100, 150K, which is significantly above uh, the median or the average people that earn here, right? So you're in similar shoes, but uh, it's not like I'm just still trying to understand like your decision or your mindset of like, okay, let's go buy a house.
yeah.
That's still unconventional, right?
Yeah, so that's where the location comes in, and the local policies of the country, and yeah, the financial policies of the country comes in. So Netherlands promotes house ownership. It's something that's
Hmm.
embedded into their fiscal policy. Until the 2008 crisis, they were offering 105 up to 110% of the home value as loan. Most of the places in the world, you have to at least put 10% or
Uh,
15 or 20%
yeah,
down payment, so you get 80% of the loan, 80% of the house as loan. But in the Netherlands, they were giving you full price of the loan and some extra money for you to maybe invest in furnishing, for the registry, for the government costs that are involved in buying the house, for the mortgage closing costs, like extra money as loan, so you can cover these costs. You
yeah,
basically need nothing. You can go there with zero money and just show your pay slips and get more money than even the house is worth. But
yeah.
yeah, this was obviously a big problem, so they decided to not give extra, but they still kept it at 100% by the time
Hmm.
I had entered the market in 2017. It was still 100%, and there was no decision, there was no desire to move further below. They were just okay, we can stop at 100%.
Yeah.
The remaining costs which are associated with buying a house, real estate agent, mortgage closing costs, government registration fees, which was 2% at that time in Amsterdam, and uh, all of those things were had to come out of the pocket.
Hmm.
But you could get 100% mortgage, so you don't have to wait. You don't have to wait for several years to save up
Yeah.
10%, 20%. In the US, if you want to buy a decent house in California, you have to spend at least
Yeah.
20, and in order to do that, you have to save 100,000, save 200,000. In I think it's 80%
Yeah.
loan capability in California. So you have to have 200,000 in the bank plus the expenses for agents and
Mm.
uh,
Right. The notary and everything. Yeah.
so that's a big amount. It takes time to acquire that much, but
Right.
you don't need to spend too much, way too much to acquire the closing costs.
You see that you see that across Europe? Like you see that kind of tendency to kind of give you 100% or 100 more than 100% loan when you're buying a house?
No, no, definitely not. In Portugal, for
Mm.
example, for residents, it's 85 to 90%. So you have to put 10 to 15%
Mm.
down. In Spain, is the same. And so I don't think this is a trend across Europe. Also, another thing to note was the registration fees for purchasing a house was 2% in Amsterdam,
Yeah.
whereas in the rest of the world, it's usually around 5%. Like
Right.
in the UAE, it's 4%.
Yeah. Yeah.
In,
Here it's like around seven, like I would say it comes down to.
in the US,
Like
7.
total cost, yeah. In Seattle, it comes down to 7%, including the commissions and notaries and everything. Yeah.
Yeah.
So you did not, so basically because of the 110%, you did not need to have the time balance, right? When you initially when you started.
Yeah, so by the time I applied, it was 100% only. So I did need the extra money for closing costs, which was not much, 2% for the
Yeah.
registration. And I didn't get a mortgage. Another thing about the Netherlands, you don't need a buyer's mortgage agent. You don't need a buyer's real estate agent.
Sure. Okay.
Uh,
Oh, okay.
the seller can has one, but and that's paid by the seller. So a buyer does not need a real estate agent because everything comes on this single platform called Funda.
Huh.
And real estate agents might argue that if you go with them, you might benefit, and that's up to you to decide if you believe them or not. I didn't believe them. I was making the search myself, and I found a good
Yeah.
deal. I was very happy with what I found, and that's what I advise everyone. You don't need one in Netherlands, but in Portugal, for example, you definitely need one. It really depends on the geography.
Why? Like in the sense that there's a lot of like things you need to be careful of in Portugal compared to Amsterdam. Things are less transparent.
It's less centralized,
Mm.
and in
So you won't see the good deals,
you
basically.
might not come across the good deals because
Yeah.
not everybody just puts it on the same place. All the real estate agents have
Yeah. Yeah.
on their own websites. Stuff may be outdated. There might be bait and switch happening. So you need an agent to sort that out. And in Dubai, for example, there is no such thing as buyer's agent, but the buyers are the one paying the agency fees of 2%. So it's
Mm.
every location, every geography has their own
Yeah.
conventions and stuff that you just need to be aware of before you step into that mindset of that I need to buy a house here.
So, and your rent basically was more or less equal to the mortgage. Like after all the calculations that you did, it was coming down to be the same.
Yeah. So the first thing was this, to your earlier question, like how did I end up getting into this mindset of buying? The first thing was this policies from the government encouraging house buying and 100% loans and very little additional costs. And then the second thing was the economics of it for me personally. So I was already living in a shared apartment with three other people.
Yeah.
So it was a four-bedroom house, and I was young. I was new in the city, and I did not have the desire to live alone. I wanted to continue living with my friends, and I instead of trying to find something small and just for me, like a one-bedroom apartment
Yeah.
or a studio apartment that's cheap and manageable, I decided to punt up my level to the max, like as what's the maximum amount of mortgage I can get, and then find a three-bedroom with that so I can live with two of my friends. And I did the math over there.
Mm-hmm.
Another thing that was very, very beneficial at that time was the interest rate was incredibly low. I got my loan
Mm-hmm.
1.5%, which is almost impossible at the moment, or even for the foreseeable future. But my loan was,
How much is it now in Netherlands?
it's, I think around 4%, around 3.5 to 4%.
Ah. Mm-hmm. Yeah, in the US it's like 7. And I know people who bought it at like 2%, like 5 years ago.
Yeah. So it's crazy, and I did not realize how lucky I was at that time. I didn't realize that this has literally been the lowest since decades, and it probably will be for the next decade. But I did see that it's not very expensive, the loan itself.
Mm-hmm.
One thing that a lot of people in that process of buying a house see is the mortgage amount, like the monthly payment amount, as a full amount, as like this is my expense, but it's not the case.
Mm-hmm.
Um, the expense is only the interest of that payment.
Right.
If you have a mortgage of $2,000, then maybe 500 of it is interest, and the
Interest.
remaining one thousand two
Right.
hundred is actually just you purchasing equity in your house, or you reducing the liability you have with the bank.
Right.
So it's not an expense; it's just changing your capital.
Yeah.
Like from cash, it is going to reduce liability.
Yeah. Right.
So
And it's crazy, like if the way compounding works, like if you do it opposite in debt, it's like at 7 or 8%, it's basically half and half.
yeah.
Your mortgage, like for a 5,000 mortgage, you're paying a 5,000 interest. It's crazy.
Compounding works in the other way. So you start off with paying
Yeah.
higher interest, but the interest keeps dropping as because you're clearing off the loan. So the amount you owe to the bank is reducing, and the interest rate is the same.
Yeah.
So the amount of interest you're paying keeps reducing over the years, as opposed
Yeah.
to when you're investing with the bank and you just keep getting more and more money for the money you've invested because it's
Yeah.
increasing, and it's the other way. So the interest actually keeps going down. And even if you're so like let's say you're getting 7% from a fixed deposit in some high yield saving account, and you're getting a loan of 7%. If you just take this loan and put that in this fixed deposit, after 10 years you're gonna have a lot more money just by doing this simple transaction.
Because it's going down, your loan is going down
Yeah.
and you're fixed. Okay.
Yeah.
So it doesn't add up to zero.
It does not add up to zero. You at the end of the loan period and the fixed deposit period, if it's the same and they're both at 7%, you're gonna have more money than you did before.
Is there a simpler calculation? For example, like right now, 7% is the interest rate that you get in US for a home. Of course, that's the lowest one, right? Then you have much higher loans. And then the fixed deposit rates, for example, here is like 3 or 4%. Um, is there like a easier mental model that you see? Like I actually never thought of it this way, that you can actually take the money for the same interest and then do FD and then you still make more money.
Yeah, so it's a bit unprecedented right now in the US with home loans being incredibly
Hmm.
high. This is not it's not normal being 7%.
Yeah,
So usually it's usually around the rate that very high yield savings account offers, not the big banks. You might find that in some small banks and in some company bonds or even in some government bonds. uh,
yeah,
an interest rate which is higher than, let's say, the home loan. And home loans are usually the cheapest forms of loan available.
right, right.
So,
Interesting.
what you can do is like every time you're going to buy a house, you can evaluate, is the interest rate higher than what I would get with an extremely safe investment, such as high yield savings account or government bonds or even some really well established company bonds. And if that's the case, then you should put as less as possible towards your home loan, so that you end up making a bit more money by investing the money that you would spend on clearing the mortgage. That's another mindset that a lot of people have. They want to clear the loan as soon as possible. So
Yeah,
they try to, every time they get savings, they're like, let me just put it into this reducing
yeah.
mortgage amount. So my monthly amount reduces, and my liability reduces. So it's sort of a psychological thing. But if you're getting better returns or even the same percent returns
Mm.
using some other very safe instruments, it's much better to keep your money in those safe instruments rather than clearing your home loan.
Yeah, but I mean, you also make it sound super easy. I feel that it is very practical, it's very technical, and it's possible. Like it makes sense. But when you were doing this, was it like that it makes sense versus like, oh, this is shit scary? Was that going through your head?
I just
Or you've seen it like in your family, like, this is okay.
No, my family actually, we bought our first property in 2015, just 2 years before I moved to Amsterdam. 1 year before I moved to Amsterdam, and it was just an empty plot. So it's not like there was a house or
Uh-huh.
anything. And my dad, despite being in finance and having good jobs and everything, it just wasn't in our family's mentality to be purchasing homes. This narrative shift came because of my experience in the Netherlands, because of the fiscal policies, because of the numbers that I crunched. So I just went on an Excel sheet and I wrote,
Yeah.
what are the, how much does it cost? And what are my monthly costs, what is my monthly cash flow, and what is the rent I can get from renting out the other two rooms, and in how much time will I break even with no increase in price. Let's assume that the house price remains exactly the same,
Right.
then in how much time will I break even.
So you're basically trying to reduce the speculation part, right? Like you're not buying a house with the speculation key, the price will go up, but you're saying that they're taking the worst case scenario, kind of like
What?
that doesn't work.
Yeah, not the worst case because that would be like the price
I
drops,
mean,
but more like,
yeah,
let's just
right,
remove the whole speculation part and just assume that the price of the house remains the same.
right.
And
Interesting. Yeah.
how does that affect my cash flow? So the amount I have to invest in the beginning, the extra amount for the closing costs and the furnishing and whatever repairs I have to do, versus how much I'm getting out of it and how much I'm saving on rent as well. So that's also part of the cash flow. That's like, because if I'm living in my own house, I'm paying all those things, sure, but I'm also not paying the rent,
Right,
and that needs to be a positive entry in my balance sheet
right.
if I'm making a comparison. So doing all of that, I saw that in 1 year I'm breaking even if I'm living with two flatmates, and
That's crazy.
after that 1 year, despite any change in price, I'm just in profit, and
Yeah.
I'm living for free. It's the rent for
How did that whole episode play out? Like now it's been what? It's been 7 years now you own that place?
9.
How did that 9 years? Oh wow, you're old.
Yeah.
Yeah, so how did that play out? Like from your mental model back then to now, was it an even better decision than you had thought? Or is it like, yeah, it was worth it? Or versus like, yeah, I would do things differently.
Absolutely nothing to be done differently. It was a stroke of luck, a combination of interest rates, Amsterdam house prices not entering crazy levels. It
Yeah.
was the same, like the same house is now almost 100% more. It's around 75% more.
Wow.
So
That's awesome. Congratulations,
yeah,
man.
thanks. But
And
it was all a stroke of luck. It was just timing. It's just that it just happened. I
yeah,
graduated at that time and I arrived in Amsterdam at that time. So it's not like
yeah.
I made a
No, we'll come to timing later. I think I have a couple of points that I've noticed about you on the timing piece as well. But how's did that whole process repeat for example, for Portugal? I know you're pretty early in that, but you think that you've played the similar cards or things were just very different and you had a lot more money this time. Basically, you need to do something with the money.
Yeah,
Yeah.
so in Portugal, which the house I purchased in Portugal in 2024, in Portugal, it was a very different psyche, I would say. Uh,
Yeah.
it was more about wanting a place of mine in the sense of something that I can set up as mine, make my home.
Mhm.
In
More emotional,
it was
more sentimental than
yeah.
than a practical one. Yeah.
Exactly. So in the numbers did not make as much sense as they did in Amsterdam. I
Hmm.
was breaking even in 1 year in Amsterdam. Over here, I was breaking in even in 2.5 years in Portugal, with
Uh-huh.
no change in house price. The amount of money that I additionally invested plus the interest that I would be paying over the next 2.5 years, that would be equal to the rent I would pay for a similar house like that over 2.5 years.
Mm,
So the break-even point was a bit longer, and there
mm,
was no income to be generated from it because I was going to be living by myself.
right.
So the maths was a bit different, but it was more of a, I want to be in a
Yeah.
house, I want to live very well, and I want to have my own furniture. I want to decorate it in my way, even do some construction, and not have to worry about anything. And it's there, like I don't have to worry about the
Yeah.
contract finishing. If I go on holiday, I can rent it out without anybody's permission, all those things. So
Yeah.
it was definitely a more emotional and a sentimental reason rather than a financial one. But even
Mm,
after almost 2 years, it's lucky that the prices in Portugal have been increasing at a pretty good rate. So
yeah.
uh, I am still benefiting quite a lot. So
Mm,
2.5 years break even was if the prices did not change, but the prices did change. They changed by around 20% in the last 2 years. 15%, I
ah,
would say, like around 7 to 8% each year. So that has already created a break even.
wow.
But that's again a factor of luck. And now with all the uncertainties that are happening,
Yeah.
things might change. But at this moment, it was a profitable.
Yeah, that's awesome. Congratulations, man. I feel so proud. I'm like, damn, man. I don't know many people who own two homes, around in their early 30s. That's pretty remarkable. I feel that I think of course it was a lot of luck, but I think you also played your cards really well. I mean, a lot of people did move to Amsterdam during that time, and a lot of people got tech jobs, and it's not like they're not doing well, but I think you picked up really, really, good deals. And I think that this is something you were telling me back in COVID. I remember when you were I was in Delhi during COVID. I think you were in Delhi too, during that time, and everything. There was this mayhem, and the markets were crashing. And I think 6 months later, you called me and you're like, yeah, bro, I made like 70% returns on the S&P index, basically, because everybody just rode off the market. And of course, this was down, right? Of course, it was low. It was a great opportunity, but like for example, I didn't use it at all. Like I was just doing my normal stuff that I do, but I didn't really like heavily, go into that moment. So I think you have that practicality, and I think that calmness of like picking the right moments, though, right?
Yeah, when a market crashes, I don't feel sad. So I think anybody who is salaried, who is making a regular income, even whether salaried or business, if you have a regular income and you're investing a portion of it in SIPs or DCAs, and a lot of it is left, not a significant amount of it is left in cash, you have a good cushion, right? Or if it's well
Right,
diversified into different regions, into different sectors, industries, and currencies, if you're well diversified, then and if you have enough liquid cash to carry you and your expenses for, let's say, a year or two, then if the market is crashing, it should play zero impact on your psychological state. You don't need the cash.
right,
You don't need to sell the stocks right now because the market has crashed. You don't need to sell the currency right now because your currency has become cheaper. You don't need to do all of that. So the fact that it has crashed right now is irrelevant because you don't need to sell right now. And it's actually good because your DCA is still going on, and that
right.
means you're getting the DCA that you're doing,
More,
amount of money that you're investing every month, you're getting more units out of it.
yeah,
So
yeah.
it's uh, it should actually be good for your psychology
And
if you don't.
how aggressively did you play that out back in COVID? Like, tell me in terms of either absolute values or percentages, like how much money you had available lying around, and you were like, okay, this much I can put in because I can definitely see. And of course, you had no idea on the time horizon, right? It was super lucky that it was in months you got the return. But what was your bet like when you made that?
So I did not go too much into it. Like I think invested a sum total of 15,000 US dollars in
But how much did you have cash lying around that
a
time? Like
lot,
how much did you?
a lot more, maybe around
A lot more.
a lot, maybe around 100. But
So you put in 15% kind of. That was your.
yeah,
Mhm.
because I have COVID was the first time I did out of DCA purchase. Like I'm not a trader.
Yeah, yeah,
I don't consider myself a trader. I don't want to get into the whole aspect of buying low, selling high, and trying to time the
yeah,
market because it for some people it works, and if you really spend a lot of time and energy on it, there is like you can mathematically make consistent profits out of it. It's possible, but it requires a lot of energy, it requires a lot of time, it requires a lot of energy,
right.
and it requires a lot of dedication, knowledge, all those things. You need to have all those things in place. I am happy with the job that I do. I like my job. That's my main money maker. That's where I get most of my income from. And the rest of the time, I want to enjoy life. I want to spend it with friends, with family, doing sports, doing my hobbies. So I don't want to get into the trading aspect. So I never try to. I don't try to time the market very often.
Yeah,
So I just stick to the DCA policy. It's going in every month, fixed rate. Over the years, it's just averaging out. The highs and the lows just average out. And if the overall trend is increasing, like if it's like this, like this, like this, but it's still going up, then I'm gonna walk away
yeah,
with a profit whenever I do have to liquidate all of that. So um,
yeah.
these kind of
That makes sense. I think it's also similar for me. Like for example, I'm I'm actually very okay if my stock portfolio is like down 10%. It actually doesn't make a like I don't feel it. Like I feel bad probably when I'm playing poker and losing to you. I would feel worse off. But I think those are just numbers. It's this strange feeling that like back when I had lower money, the money was so important. Like each dollar or each euro counted a lot more. And now it just goes like 10K up, 10K down. I don't even remember. Like it's just like a WhatsApp message that this happened. Okay, fine.
yeah.
And I think that's when I realized that I'm actually built. I am actually I can do a lot better in investing because I don't have that emotion to it. Whereas I see my other family members, they're highly emotional, irrespective of the absolute amount. It's crazy actually.
Yeah, I think investing has like that's one of the things. Even if you are a trader, if you're trying to buy low, sell high, in emotions is definitely something you have to keep out of the game. And even if you're a passive investor, like how we are, even then you can feel happy when your stocks are high.
Yeah,
You can feel a little bit like, oh, I need to control my expenses if the stocks are a little bit low. But I don't think that's necessary. I think it's just that um, if the stocks are high and you feel happy, it's like, what does that actually make? It does not change the money in your bank balance. It does not change your budgeting policies and rules that you've set out for yourself. So
right.
it's like it's just something on the side, and only when something really like tough happens in your life and
Yeah,
you need the cash for something, and at that time the market is down, then it's a little bit messed up to go like, oh,
yeah,
why do I have to sell at this exact moment? That's bad. So that's
exactly.
the only situation when it can actually hurt you. When you need the cash, when you really need the cash, you need to liquidate, and the market is down. That's where it will hurt. But if you don't need the cash and you have enough money in high,
Emergency fund and right.
then the
Yeah,
chances of you needing to sell at a down time is also very low. So you can just be rest assured. You can just be happy that now my DCA is purchasing at a lower cost, and I'm getting
right.
more units. And later on, if I have bigger
And-
goals in life, if I want to buy a bigger house, if I want to buy a house for
Yeah,
my parents, if for my kids' education or whatever, and
yeah,
it won't be sudden, right? You can plan it. You can sell. You can liquidate
right.
at a good time in the market, and then just transfer that to safer investments or savings accounts, and fund that from there. So these are planned expenses, and you can plan accordingly. It's only for unplanned.
And are you still very like are you still very much in control of the finances, or has it changed since you've, gotten better with money and you're making a lot more money?
So before I used to have like individual line items in my budgeting sheet for food, for
You taught me that. You got me corrupted.
for you know.
That helped incredibly. Now it's for me, it's like every 1 month. I'm like, yeah, sure, this looks fine.
Exactly. So now I don't differentiate between food and party and eating out. It's more like monthly expenses, which has phone bills and everything just fixed monthly is in monthly, and then there is travel, which is another category. So I just have monthly expenses and like one-off expenses, which are not
Yeah.
recurring, and that's it. That's like those are the only two categories I have now. So I'm not.
Yeah, no, I think the Excel sheet that you shared with me, that was I was so religious about it, man. I'm actually very proud. I mean, I'm I've always been very careful about money, but that Excel sheet kind of gave me a reason and proof that I can be good with money. So I've been very diligent. But I think last 3, 4 years, I'm like just once a quarter, I'm like, okay, all credit card bills go in here. It is actually I'm just rather tracking the net worth rather than the line items of expenses. And I think one thing you importantly, the kind of nuanced thing you said earlier on is like you're looking at the cash flows when you're doing those big investments and purchases, because I feel that a lot of people would. I think what is the term? They say that they are asset rich and cash poor, right? That's a term which is just means that you have $1 million net worth, but you have a house of $1 million. You bought it, but you don't have cash flow. That just means your purchasing power day to day is you are kind of miserable, and that's not in a way don't see it as wealth because you have $1 million house, you're living in it. What are you gonna do with it? You can't sell it. You can't like it, and this is more, I think, more applicable to people slightly older in age. I think that's very important too, right? So maybe could you speak to more about like kind of is it's like feeling rich being having a strong cash flow versus just the net worth number?
I think it's a mix. So if your net worth is $1 million and it all comes from a $1 million house which has no loans on it, then you're in a pretty bad financial shape. Like that's you shouldn't have arrived at this position. Like you made some wrong decisions. If you have $1 million home, no stocks, no bonds, no gold, nothing, and just maybe a few thousand dollars in cash, you definitely made some bad decisions, and that probably was clearing out the loan that you have in the house, or that you bought the house with the $1 million you had in the bank account. So definitely not a good place to be in. I would say what's important and it's not just cash flow or not just cash non-liquid asset rich. It's more about balance. So I would say depending on your age, if you're younger, then you can have, let's say, 30% of your net worth in real estate, in the equity that you have. So the value minus the
Mhm.
loans, and then 40 to 50% in the liquid ETFs and stocks, and then the remaining maybe 10% in cash, ready, just cash in savings accounts, and the other one in more safer instruments like bonds and gold ETFs, or just literal physical gold if you
Mhm.
want. So it would that would be the split for maybe someone in their early 30s, and then as you grow older, then like your real estate equity would just gradually increase,
Right.
and there would be a little bit of a shift from uh, volatile stocks to more bonds and savings accounts. So
Mhm.
yeah, I think that ratio has to be adjusted, but it should never be 100% of one thing.
Right.
And if you don't want to buy a house but still want exposure in real estate, what a lot of people do is get these things called REITs, which is ETFs
Mhm.
for real estate. It gives you the exposure, and without the hassle of being a property owner. But being a property owner is something that's psychologically valuable to a lot of people,
Mhm.
because it's brick and
Right.
mortar. It's something that you can fall back on. So I would say it's not just about exposure; it's also about this psychological peace of mind that real estate investment provides, which is also valuable. So it's not monetary value just; It's also this
Hmm.
peace of mind that, whatever happens, even if the world crashes, I have a place to live which I won't get kicked out of because I can't pay rent.
Yeah, that sounds, I think, very relatable, and I feel bad for people like who kind of feel cheated because now they have all these assets and now they still feel pretty broke. And that's interesting. And I think one thing that I also want to talk about was your ability to basically use a lot of leverage in your life. I feel that you've done something which is phenomenal. I don't know anybody else. I think people uh, salivate when I tell them kind of your situation right now with your where you're working and like the job you're having with Loom. It's pretty remarkable. I feel that that to me is my dream, basically, to be, having a remote opportunity. Um, you get the best of both worlds. You make a very good compensation, but at the same time, you're fully remote and you can do your life. And do you think that is going to be happening more and more, or it's still like you still feel like this was a lucky opportunity versus how it's trending right now? For example, I want to work in Europe, man. Like I feel like if I could, get a US salary working in Europe, that I would be like the happiest man alive. At least, that's what I think right now. But talk to me about what do you see right now in the tech industry, especially with AI and stuff? Like, is that also an opportunity for people to get more open source, more remote work available?
Yeah, so a lot of things over there. I'll start with uh, how I landed this opportunity and whether it's sustainable to last a long term. Honestly, I don't think it's very sustainable, and I've already begun diversifying out of it. I can tell you a little
Hmm.
more on that afterwards. But right now, I'm just counting my stars. I have this, and
Yeah,
as long as I have it, I'm gonna enjoy. I enjoy my job. It's not something that I'm doing only because of the remote situation or the compensation. I I genuinely like it. It's fun,
right.
and so I'm happy with it, and they seem to be happy with me. But AI adoption is growing at a fast rate, and we have not hired any engineer for a very long time. We're not planning to.
Hmm.
So um, and companies all over the world are actually reducing their remote operations. Even my company, we haven't hired any engineer. We don't plan to, but every other role that is being hired in the company, that is also only for US physical office people. So not remote anymore.
That's just because of the philosophy, right? Like working in person is better than working remote. That's the only reason, right?
That is the only reason, and this has been studied and proven by the big tech companies. They did an analysis, and they found in very clear terms that employees working from the office are significantly more productive than employees working from home. Of course, that does not apply to each and every single individual, but that's a general trend.
Average, right?
And
Exactly. Yeah.
that's the study that they're basing their decisions on, and other companies are following. Very few companies that were already remote before COVID are still sticking to this ethos because they manage it. But it's definitely something that becomes increasingly difficult as you scale up. So it's possible for smaller companies, but becomes difficult for bigger companies. And the trend is not looking upward.
Hmm.
Um,
For remote work.
yeah. Uh,
Yeah.
so
But you've been here how long now in this remote role?
so I've been remote since COVID. As soon as COVID hit, I have been working from everywhere, and
Yeah.
so it's been more than 6 years now. And
That was Uber plus Loom, or that was mostly Loom?
Uber for 3 years and Noom for 3 years.
Oh, nice.
Yeah, and
What's the craziest place you worked from? Because you do kite surfing, I can imagine you just working from a cafe and then, going for kite surfing in the evening. I did that for a week. That was amazing. But this is 1 week in Portugal, actually. I did that. Yeah.
yeah, no, of course. I mean, there were times when I was rushing back from a hike and just rushing directly into a meeting from a morning hike maybe, or a morning surfing or a kite surfing session, and just like haven't even changed from my swim, like obviously not my wetsuit, but from my whatever I put on in the morning, like half wet, and just there with my swim shorts, also half wet, and sitting in the meeting talking about KPIs and OKRs and deployments and whatnot. It's like, okay, my hair still has sand in it. So it has happened a few times.
Isn't that unreal, bro? Like, isn't that unreal? Like, it's only been 10 years we've graduated from DC. And like to be, I don't know. I mean, I have a family. I have a baby. I look at it every day. I'm like, where did you come from? Like, this is it's because I think it's just things, of course, worked out. Very lucky. Like, things worked out. Like, I got to live in 4 countries and, move around with Amazon, and similarly for you. But also, I think we've milked it also, right? It's not just we were kind of scared or just apprehensive of doing things which are not normal just because what if this goes away? And we know this is gonna go away. I think what you're describing right now is the every phase we've had in life, right? We don't know how long this is gonna last. So I'm just counting my stars, right?
Yeah, so yeah, I mean, I think that's one thing that we have done is milk the opportunity and taken calculated risks. You have to take risks in order
You're right.
to get rewards. And what we have both done is we've both calculated our risks and calculated our potential rewards and deemed it worth, and that's why we took the steps that we took. So it's definitely luck has been on our side, but it's also that we have always been open to opportunities and exploring them. And if something comes, if an opportunity knocks at our door, we really take a good look at it before doing anything, whether to take it or not to take it. So I think that's definitely a key element, alongside the fact
Right.
luck has played well in our situation. Uh,
Yeah, and I also think you're somebody who like enjoys things like outside of work, today. As you were saying, you do all that crazy stuff because you genuinely are a person with such interest, right? You would, I think, with the real estate purchasing that you're doing and the stock market, and then you would have your app ideas, or you would get a motorbike, and like I think this is who you are. This is you are not you're not somebody who would be happy, I think, if you were caged in a office for 8 hours for longer time. I think unless the problem was very interesting, right?
yeah, definitely. But after working from home for 6 years, I don't think any problem will be interesting enough for me personally to be happy to be going to the office again. I value this life a lot more, and as I'm also preparing or transitioning into the next phase of life, where I also want to get into a similar situation like you, with a settle down and with a family and everything. Even then, I would much rather be spending more time with my family rather than
Right.
some random colleagues at work, even if it's a very interesting problem. I'm actually becoming more and more uh, like inclined towards that idea than the idea of solving complex problems. In fact, I'm actually hedging against tech right now. So because of all the volatility in it,
What?
well,
Really?
not against it, but let's say outside of it. So all my previous
Okay.
ideas were usually in tech, building some app.
Yeah.
But right now, I have two projects that are ongoing: one in Portugal, one in Netherlands, which are brick and mortar businesses. They're real life physical businesses. One is just a classic real estate flipping with a friend of mine who's a local architect. He's a Portuguese architect, a lot of experience, great guy, great vision, very good architectural vision. I help out with the administrative and the numbers and everything, and he takes care of
Mhm.
the architecture and the project management. And we buy ruins in Portugal, really destroyed properties, and
Why?
uh,
When Helena saw this, I think the recent video that she sent me, she was like, "No, no, no! Is this because she didn't understand that there's also the whole vineyard or the whole there's a farm connected to it. So she was just surprised that you bought it out of nowhere. That four walls. So I'm excited like what it turns out to be.
Yeah, yeah. The walls are up now fully. The roof is up, and the flooring is done. The now we're laying out the plumbing and the electric pipes,
Wow.
and connecting to the sewage, to the municipal sewage system and the water. That's all underway. But the house is now like it's the physical shape is done now. It's all about
Wow.
interiors
Incredible. So,
and
and you would,
beautification and adding
what
tiles.
about the, what about the one in Amsterdam? What is that business?
So it's funny how it started. I was on a trip with two of my closest friends from Amsterdam,
Right.
and one of them, his girlfriend, recently got into this reformer Pilates, and he was just telling us about yeah, she's going there 2 3 times a week, and paying 20 euros per class, and even despite that, she's never able to find a spot. Like she has to book maybe a week in advance in order to secure a spot in these places. And um, and then we were just like, yeah, I see so many, all our female friends, like their Instagram stories just doing something in reformer Pilates. And so that made us question, like, hey, is there space for this? So right now we are preparing to open a reformer Pilates studio in Amsterdam.
Crazy. With those two guys as partners? Is that like the three of you?
No, it's just one of them and me. And
Wow.
so right now we're in the research phase. We're doing um, figuring out which location would be the best to set it up, where can we source good materials, and how can we create a good roster of Pilates teachers. So all those things are being researched right now, and the plan is being set up. But we want to start with reform Pilates, but eventually, like, our ambition is to make a fitness, like whatever is alternative sort of fitness, away from
Mm.
conventional gyms and CrossFit and
Mm.
so things around fitness. So we want to expand into what's new and what's trending, and adapt to trends, and do things rapidly. So if the reformer Pilates trend dies out, then we remove all of that and then switch
Yeah,
it to whatever's trending right now. So have this like dynamic sort of setup which can adapt to these ever changing trends in today's world.
that's awesome. Yeah, no, that sounds great, man. I think I'm always, rooting for you, and your ideas are pretty awesome. I'm looking forward to you executing those, especially the one in Portugal. Send me a video when you get time, or whenever you think it's a good stage to share. I'm genuinely curious on how it turns out to be. And I think just on the last part, I think how long have you? So you said you have been working remotely in COVID for last 6 years now. Most of it was like you would say 3 years in Amsterdam, 3 years in Portugal, and then like actually 1 year in India already, right? More or less.
Um, since last year, I've been spending a lot of time in India, but before that, I didn't spend much time in Amsterdam. I was just traveling around a lot. So Europe, Mexico, Dubai, US also a little bit. So first 3 years was just like being a proper nomad. And then the next 2.5 years was in Portugal. And now I'm in India for the time being.
And this is all the while, like kind of, especially with the Loom, you're drawing US salaries, right? You're drawing US salaries, and that, I mean, that easily covers up all your expenses that you have in India, which is probably less than $500 you're spending in Delhi.
Yeah, yeah. It's not about daily expenses anymore. It's now just um, it's about now investing into these right places. So it's
Mm,
not just ECAs anymore. As I mentioned, now I'm actively investing in these two businesses. They're completely self-funded. So
yeah,
it's not about just balancing expenses minus income and looking at the cash flow. It's more about now a broader range of investments that I'm doing, which is what I do with the cash now. So yeah, and Yeah, of course, the compensation helps in to be able to make impulsive decisions about going and living somewhere for a few months. But I don't think like I would be doing that despite having maybe even 30% of the compensation I have right now. That's just
Right.
that's
That's just who
that,
you are. Yeah.
that's just passion.
I
Like it,
I
uh,
remember the day you decided to camp and you were visiting me in Luxembourg. Me and Helen, I remember in journey very fondly. Like you brought the tent and you said, I bought a tent now. I have to stay in a camp. So you actually camped 10 minutes walk from our house there in the forest.
yeah,
And
it was a
me and
beautiful.
Helen were just looking at each other when you guys left and like, yeah, okay, this is like maybe we're hosting them or something, but they're sleeping in the tent outside. I mean, we're not the best hosts, but that was
No, no,
hilarious.
you were wonderful hosts, and the fact that you provided us a campground just 10 minutes from your house is amazing. So it
Yeah,
was
man.
a
This is
wonderful time.
Yeah, no, I look forward to, all the stuff that you're gonna do in future and I appreciate you, man. There's a lot of love for you and I'm just I genuinely feel that those conversations that we had back in Amsterdam and Prague, those helped me understand a lot about finances and like 100% credit. I think then there were a lot of people who took kind of the lead in helping me with finances and understanding investing and value investing and things like that. But I think you were the first stepping stone and the first person I saw in real life. Like, I was like, what? And so all that explanation that you did, and then, your understanding of money, that was incredibly helpful to me. Like, incredibly helpful. And yeah, I hope this conversation helps people. I think, this just money is such an important detail of people's life, especially early on. And unless you sort money problems, I think there's like money doesn't solve a lot of problems in life. It does solve money problems, and that is a big one for a lot of people. So thanks a lot, man. Uh, all the success and all the happiness and whatever you do next, uh, my hopes and wishes are all for you.
Yeah,
Cool. Take
of
care,
course,
man.
man. Appreciate the
Yes.
conversation and appreciate you, of course. And thanks for breaking my uh, YouTube podcast bubble. It's now, I guess, now I'm part of it. Maybe a few years down the line, I'll invite you as my guest.
Yeah. No, yeah, I think you'd be having pretty good conversations. You always have this interactions with people, and I think people remember you. I think everybody I know, every friend of mine that you've met, they remember you. My dad remembers you. I think you have this genuine curiosity. It's kind of annoying at times, but you're just so interested. It's just incredible, like how much you would try to understand somebody and not be disrespectful and still be like an amazing human being. So that's really rare. Yeah.
Appreciate that, man. And of course, it goes the same for you and like 10 times more, especially the annoying person.
Take care, man. Have a good day.
Okay, bye
Bye.
bye.
Chal, bhai. Love you. Take care, man. Bye.
Thank you so much for listening in today's conversation. If you found this or the past conversations helpful, please do share, comment, and subscribe. See you next time.